What can we expect to see next week in the financial market of tech stocks? In this video, we're going to be looking at some of the key tech stocks in the US market. These including Palantir, Rivian, SoFi, Tesla, NVIDIA, Google, and Broadcom. With the earnings season winding down and new economic data on the horizon, the markets are primed for movement at the moment. We'll be breaking down some of the key factors that could drive these stocks up or down, hopefully up of course, but we will be getting into that. And we will be discussing what this will mean for the average investor. So without further ado, let's get straight into this video. So we're going to be kickstarting this video off by looking at Rivian. I've actually just done an analysis on Rivian as they have had a really good quarterly earnings report come out, and this video will be listed above my head right here. So please do check that out if you are really interested in this stock. But looking at the daily chart here, we can see some trends starting to appear. Taking a look at the resistance and support, we can see a support level here at around $12 and a resistance where we are currently at $16.65. According to this indicator here, we are currently on a long position. How long this could carry on for, I'm not entirely sure. Of course, we have had this massive spike from the earnings report where it was up around 24% on the day. I think we are expecting to see this continue to rise. I do think we're going to see a bit of selling off in the next 2 days, but overall for the week I imagine this will be a strong week for this stock. According to my system, the intrinsic value for Rivian is currently at $42 to $79 on a bearish and bullish indicator, with a 75% margin of safety. A suitable buy-in price would be either $32 or $59, and currently we are at $16. So according to my system, it is definitely a brilliant time to buy this stock for the long-term upside, of course. But I do think you could potentially try and time the market a bit better. How much better, I'm not entirely sure. If you are looking to get in for the long term, then I don't think you should bother trying to time the market. But for people that are looking for medium term, I do think we're going to see a bit of a drop off towards the $15.5 mark, which isn't a massive drop off at all, but it will definitely increase profits the further the stock progresses. Of course, Rivian has had a tough few years. Since 2022, we have seen a massive decline here, and we are now just about at the bottom of this. And of course, with that massive undervaluation, I do think that this stock does have the potential to climb back up in 2025. I could definitely be wrong about this. Like I said at the video, I'm not a financial advisor, but these are just my own personal opinions. I do think that we will climb up to about, I don't want to be too optimistic, but around the $69, $70 mark within 2025. I do think there is room for growth, especially as this company is now turning profitable and finally reaching new deliverable dates and producing more vehicles than expected. So now we are going to have a look at Tesla stock. What can we expect to see from Tesla? We are still, according to this, on a long form here. However, I think we are going to see these cross over potentially in this next week, possibly. Again, speculation, I'm not entirely sure, but from this is what I imagine. With the support starting to rise up and the resistance here leveling off, I think we might see these two trend lines meet up, turning the position into a short position. However, I don't think that will last too long. I think Tesla is going to have a brilliant Q4 earnings report when it does come out. With this recent downturn being due to a release of Q4 production and delivery figures that fell short of market expectations, this led to an 18% drop of the share price over the last 5 days. So we have obviously seen this consolidation here. We are massively above the moving averages on the 200, 150, and even potentially looking close, we are just above the 30-day moving averages. This is actually relatively bullish for this stock. We are still massively above the target price here for the moving averages. But it could be expected that we will see Tesla stock starting to catch back up with these moving averages as we see a bit of sideways action in the next couple of weeks. This is definitely not the end of the bull run for Tesla. I think this is still going to be a solid stock for 2025, especially with 24 being on average a pretty dull year for the stock, with it picking up in the tail end of the year. I think 2025 is still going to be a very strong year for this position in Tesla. So if you are in Tesla for the long run, I'm not saying to sell at all. I think it is a brilliant time to be holding Tesla stock. Despite this, however, I do want to quickly throw in here that we are massively above the intrinsic value according to my system. The intrinsic value is set at $237 on the high end, and we are obviously massively above this at the moment. So this red box indicates a potential over evaluation, but I don't think this stock is actually over evaluated. I do think it is slightly, don't get me wrong. I think we have seen a lot of hype in this stock lately, especially with people buying in because of the Trump-Musk relationship. But I think when you tie that into the valuation, putting financials aside, it does actually match up. But according to the financials of Tesla stock, it is overvaluated. So it will be interesting to watch. And I do think we are going to see a bit of sideways action whilst we catch back up to the trend lines with this stock. So now we're going to move on to another stock. So having a look at Google or Alphabet, we can see here that we are currently on a long position. Obviously, recently around here, we had the news of them breaking through with their quantum computing chip. This massively hiked the stock up, and since then we have seen a lot of sideways action. We haven't actually seen a massive sell-off of this stock, which is extremely bullish. We are massively above the 150 and 200-day moving averages here. Having a look at the dynamic support and resistance, on the support here we are at 171 and the resistance is at 201, so there is plenty of room for this stock to play before we do see a huge sell-off, of course. But despite that, a huge sell-off would be reaching this support, so hopefully this support does start to match up soon. Personally, I think we're seeing more of a support around here, of course, with the two candles here meeting down at the bottom. I think if we do see this sell off to here, we are going to see us reach back down all the way to this support. But I think by then this support would have caught up to around about here. So it is definitely something you should be putting stop losses into, but you should be putting stop losses into every stock, of course. But I'm not expecting this at all. If anything, I'm actually kind of expecting this to only increase. I'm actually expecting to see a price target by the end of next week. This could be a bit obviously skeptical. I wouldn't put too much trust in this, but for me, I would be putting a price target at around 195. I think we are going to see a bit more buying pressure next week should everything go to plan for Google. However, we are in a bear market at the moment, so it is expected that this could also drop. So it is pure speculation, and the Santa run has now officially ended, of course, being that this is now the 4th of January as of recording this. So it will be something to watch for sure. With the intrinsic value of Google being on the high end of 222 and the low end of 130, we are towards the high end here. We are still in this intrinsic value, of course. We're not massively overvalued in Google stock, and with them breaking through with massive accomplishments such as the quantum chip, I think that it is fair to say that this is a fair valuation of this stock. So Palantir is just a stock that seems to just never slow down and continues to grow year on year, quarter on quarter, especially recently. As of around September, we've just seen a massive amount of growth in this stock. We can see a support here at $68 and a resistance at 84. We are massively above all of the trend lines, projecting this to only increase, but there must be a point where this does slow down. Will it be next week? Probably not. Will it be the next month? Still, probably even not. Realistically, it should. It is technically massively overvalued, but we don't really know the valuation of this stock at the moment, being as it is changing day by day. It's very hard to predict Palantir. I currently don't hold any Palantir shares. I have been very bullish on this stock previously. I actually don't hold any shares at the moment. I'm completely liquid, looking to buy in later on this year at a cheaper price. I could be completely wrong with doing that, but that's enough about my situation. So what can we expect to see from Palantir? Well, looking down here, we are still on a long position here, and it doesn't seem to be slowing down. This, of course, was placed in June, so it's hard to say when we do expect this to slow down. We are just climbing and climbing and climbing with no signs of slowing down recently. It is a crazy situation, is Palantir. I can't really put much prediction onto this stock, as it is just, you will say it will go down and it will go up for sure. I mean, it's just one of them stocks. So for that reason, I think we are going to have a lot of sideways action in this stock next week. I think we're going to see a finish off above the 80 mark. Again, we're currently at $79. I think we will get to about $82 by the end of the week. I think it's going to be a bit volatile with a lot of volume being traded, of course, but I don't think we're going to see a sell-off, especially with the support being down at $68. I would actually put a separate support down here, roughly, it'd be a bit higher than that, but it would be around $70 before then you start to look at the second support here. And I think realistically, if you do have positions in this, I would be setting a stop loss at around $60 at the minimum, really, just to really hedge your bets. Because with stocks like this, I mean, they go up quick and they can come down very quick as well. But I don't think we can say that this is an overvaluation. I mean, when you look at the intrinsic value, it is really, really low. But again, I don't want to base anything off of that, because that is based off of estimates on growth, in which we can't really predict it at the moment. So for that reason, I think we're going to see a bit of sideways action in this stock, but I would definitely say put a stop loss in place. But I'm not saying it's going to go down at all. Don't get the wrong impression. It's just something to keep an eye on. So now we're going to move on to SoFi stock. We have seen a big sell-off in this stock in the last week. However, I don't think this was natural. I think people were going to obviously take profit at some point, but this was massively due to a downgrade from KBW, which is a analyst group in which projected a price target of around $8, I believe, which is massively, in my opinion, and I think everyone else's opinion, stupid. For this reason, we did see a sell-off, and we are now at that resistance, the support, sorry. I think we are going to see this climb back up next week. I think that it doesn't deserve to be down this low. Again, I don't want to hype it up too much, because it's hard to say with stocks that have just grown exponentially over the last year. But I do think we can expect to see this stock climb back up to around the $15.60 mark next week. I could be very wrong with that, of course, and I do want to keep reiterating here that this is just speculation. And I'm not a financial advisor, this is just my own personal opinion, but I think we can expect to see this stock climb back up. We are actually on a long position still, and I don't think we can expect this to start slowing down. Although looking here, we are actually seeing that when these two lines here cross paths, we can expect this to change into a short position. But I do think we are going to see potentially a bit of growth next week. Again, could be very wrong. We are, of course, massively above the moving averages for the 50, 100 and 200 closes. So we are expecting this to continue to grow. However, I do think we are going to see a growth and a catch-up for these trend lines. I think we can't see this grow exponentially. I say that, I do think we are going to see this stock exponentially grow over the next few years. I think this stock is going to have a good 2025 and a good 26 and potentially even 27. I think this is a stock to get in now, whilst it's still a small cap, as well as the fact that Donald Trump will be taking office later this month. He will only help out with stocks such as SoFi. So I think it is a good time to be buying into SoFi, especially at this discounted price here. I do think we're going to see a lot of growth, but again, pure speculation. It's quickly very important to note that the intrinsic value for SoFi on the low end is $12 and the high end is $24, with a margin of safety at 75%. We can see a $9.4 buy-in or an $18.49 buy-in, and currently being at $14, I think it is reasonably a very good time to buy, just to even catch up with the intrinsic value. And then from there, I think it's still going to get artificially pumped up anyway, due to a few factors such as the office changing presidency and other factors in which people are just pumping this stock consistently. So we're now taking a look at Broadcom. Broadcom had a massive price increase in Friday the 13th of December. This is due to a few factors, one of them being strong financial performance, another being increased dividend announcement, an expansion in AI-related sales, and a positive analyst outlook. So we have obviously seen this price hike. Despite this, my system actually put this at a short, and according to my my other system, the intrinsic value for Broadcom is on a low range of $31 and the high range of $57, and we're currently at $232. So we are massively overvalued according to that. However, I don't think we can go off that too much, as I don't think that includes the aspect of the earnings being higher than originally thought. Despite this, I do think that this stock could potentially still be overvalued. Don't shoot the messenger. But I just think we are going to see a bit of a sell-off in this stock in this next week. I don't know how much. I don't think it will be much, but I think if you do have a position, definitely put in a support around let's see what figure this comes to, around the 217 mark, just to hedge your bets. Saying that, the support is very low and the resistance is very high. Well, it's not very high, sorry, but it is definitely, we're not expecting to hit that in the next week, so I think we're pretty safe in terms of hitting resistance next week. Despite this, I really don't think we're going to see a big sell-off in this stock, as here, this should be indicated here as a long position, and we can see here that these moving averages are very distant from each other. I think we will see a bit of a sell-off this week potentially, but I do think overall this stock will be perfectly fine, especially now that Broadcom is playing a more pivotal role in the AI expansion. I think long term this stock will be perfectly fine despite the intrinsic value being so low and the price being so high. I do think we're going to see a bit of sideways action in this stock long term as these trend lines do start to catch up. We are of course massively above these trend lines, so I don't expect to see this start to sell off massively, but I do think we are going to see a match up soon. I think we're going to see a lot of sideways action, as I just said. So if you do hold Broadcom stock and you got in at an early enough stage, I think it's definitely a good stock to be holding, and I do think it will be a good year for Broadcom. And now finally we're going to take a look at NVIDIA. So we can see here that the recent position in which it suggested was a short, but I think we are going to see this change over again to a long position. Speculation again is hard to say, but we have seen a really good end of the day on Friday, this being down to a projected 22% growth. NVIDIA shares rose by 4.5% following the 3% increase the previous day, with the CEO scheduled to speak at the CES Tech Show in Las Vegas on Monday. NVIDIA invested in major AI funding rounds, including a recent $17 billion raise for xAI and an $18 billion round for OpenAI. So they're definitely hedging their bets with AI, and it's paying off for them, of course. As far as the trend lines are concerned, we are above the 200 and 100-day moving averages, with us being on the 50-day moving average pretty tightly. I think we are going to see a bit of growth in this stock, especially with the talk on Monday. So if you are holding NVIDIA stock, it's definitely a stock to be holding. Of course, it always is going to be, with the estimated earnings being at 50%. The intrinsic value for NVIDIA is between 132 and 251. With us currently being at 144, I still think it is a brilliant time to be holding this stock, with on the high end, we can see a high potential for growth in 2025. With the resistance being set here at $146, I think we might match up to that by the end of next week. But there is potential to go higher than that. It all depends on the market. Again, we are currently in somewhat of a bear market. With that being said, I'm going to end this video here. That is all the stocks in which I wanted to discuss for next week. Of course, this could definitely be wrong. This is just what the trends are predicting. It could all be very different depending on how the market shifts next week. We are, of course, seeing a big sell-off market-wide at the moment, as this recent run in Q3 has been massive. Q4, has been massive for the whole of the American market, and we are seeing people starting to take profit and markets starting to meet back up with trend lines. So please do take this with a pinch of salt, but it should be relatively, hopefully, accurate. It could definitely not be, of course, but this is just the predictions off of the trends and the indicators. So I hope you have enjoyed this video and found it useful. If you have enjoyed or did find it useful, please do consider liking and subscribing. It would be greatly appreciated, and I will see you for the next video.